What's going on, everyone, and welcome back to Explain the Charts. Today, on October 28th, 2025, we're taking a deep dive into Amazon, symbol Amazon, which is facing a pivotal week packed with major headlines and a critical earnings report. Let's first break down the news that is driving the conversation around the stock right now. The biggest story is the report that Amazon is planning to cut as many as 30,000 corporate jobs, with the process expected to begin as soon as tomorrow, October 29th. This represents a significant reduction of nearly 10% of their corporate workforce and is framed as a move to improve efficiency, partly through the use of artificial intelligence. While job cuts can sometimes be seen positively by the market as a cost-saving measure, it also raises questions about the company's growth outlook. This news is especially interesting given that Amazon stock has been a significant laggard among the Magnificent Seven this year, up only 3% year-to-date, while the S&P 500 has gained 17%. Adding to the pressure, Amazon Web Services, or AWS, has seen its growth lag behind competitors like Microsoft and Google. There are also reports of Google being in talks for a major cloud deal with Anthropic, an AI company that Amazon has also heavily invested in, creating a direct competitive headwind. However, it's not all cautionary news. Amazon has also announced several strategic expansions. They're expanding their healthcare footprint with Amazon Pharmacy kiosks, growing their private label grocery brands, and securing major partnerships, including making AWS the official cloud partner of the NBA and integrating FanDuel betting odds into Prime Video. The most critical event on the horizon is the company's third-quarter earnings report, scheduled for this Thursday, October 30th. This report will be the ultimate catalyst that could either confirm fears of slowing growth or signal a powerful turnaround. Now, let's see how this narrative is reflected in the price action on the daily chart. Looking at the bigger picture for Amazon, we can see a significant run-up to a 52-week high of $242.52 back in early February of this year. Following that peak, the stock entered a sharp downtrend, finding its 52-week low just 2 months later in early April. Let's zoom in on that period of extreme volatility in April 2025. Here you can see the massive price swings, where the stock plummeted from around $196 down to a low of $161.38 in just a few days before staging a powerful, V-shaped recovery. This highlights how quickly sentiment can shift in this name. Returning to the full chart, after recovering from those lows, the stock climbed steadily until early August, where we see another dramatic event. This massive gap down from around $234 to $217 likely corresponds to the company's last earnings report, serving as a stark reminder of the potential volatility we could face this week. Since that August drop, the price action has been choppy. The stock found a bottom in late September and early October, establishing a key support zone around the $214 to $216 area. This level is significant as it aligns with what news reports identified as the 200-day moving average, a classic technical support level. For the past few weeks, the stock has been grinding higher, but it's now running into a critical resistance zone between $228 and $230. Let's switch over to the 1-hour chart to get a closer look at this recent uptrend. Here we can clearly see the climb from the lows near $213 on October 17th. The trend has been characterized by a series of higher highs and higher lows, which is a classic bullish structure. However, notice how the momentum has started to flatten out over the last couple of days as the price approaches that key $228 resistance level. This suggests traders are becoming cautious and taking profits ahead of the major news events this week. Now, drilling down to the 15-minute chart, we can analyze today's intraday action. The market opened strong today around $227.66 and pushed to a high of $228.40, directly testing that resistance zone we identified. Since hitting that high, the price has pulled back slightly and is showing some indecision. This price action tells us that buyers and sellers are in a stalemate right at this critical juncture, with neither side willing to commit fully before the earnings report and layoff news unfolds. So, Let's pull back to the daily chart and summarize what we're looking at. To recap, the key price levels are absolutely critical right now. We have major support in the $214 to $216 range. A break below this would be very bearish in the short term. Immediate resistance is the zone the stock is currently fighting, from $228 to $230. If the price can break above this level with conviction, the next target for bulls would be the highs from before the last earnings drop, around $235. Above that, the ultimate target is the 52-week high of $242.52. Now for some potential scenarios heading into Thursday's earnings. A bullish outcome seems slightly more probable if we assume the market wants to react positively to cost cutting, but it is highly dependent on earnings. I'd place about a 60% probability on a bullish reaction if earnings beat expectations and, most importantly, if AWS shows re-accelerating growth or the company provides strong forward guidance. In this scenario, a break of $230 is likely, with a move toward $235 reinforced. Conversely, the bearish case has about a 40% probability. This would be triggered by an earnings miss, weak AWS numbers, or cautious guidance about the consumer. If this happens, the layoff news will be interpreted as a sign of weakness, and we would almost certainly see a break of the $214 support level, opening the door for a move down to the $200 psychological level. The two main things to watch are the market's reaction to the layoff announcements beginning tomorrow, and, of course, the earnings numbers and subsequent management commentary on Thursday. The guidance on AWS will be what institutions and analysts focus on the most. Thank you for watching this analysis on Amazon. Please remember, this is not financial advice and is for educational purposes only. Always conduct your own research and make investment decisions based on your own due diligence. Good luck to everyone trading this week.